Welcome back to the Daily Crypto Roundup. Today, the market is dealing with a strange mix of stories. Bitcoin is still struggling to reclaim its 200-day moving average. Treasury yields are pushing to 12-month highs. XRP has given back a rally that was sparked by fresh optimism around the Senate crypto bill. Strategy is moving to repurchase around $1.5 billion of convertible bonds, and the Trump family has disclosed new purchases in crypto-linked stocks including Coinbase, Mara, and Strategy. Then, later in the episode, we are also looking at the latest Celsius fallout, because former Celsius executive Roni Cohen-Pavon has avoided prison after cooperating with prosecutors in the criminal case against former CEO Alex Mashinsky. So this is one of those days where the price action might look quiet on the surface, but underneath, there is a lot going on across Bitcoin: regulation, politics, public companies, and the old collapse stories that still haunt crypto. Just before we continue, this episode is brought to you by Kraken, our official exchange partner. If you want a simple, secure way to buy, sell, and explore crypto, Kraken is well worth a look. There is a link in the description, and we are also giving away 20 XRP to one listener who signs up through our Kraken link and gets involved with the show. As always, this is not financial advice. Crypto trading involves risk of loss, and you should only invest what you can afford to lose. But if you are looking for a serious exchange with a strong reputation in the crypto market, check out Kraken using the link in the description. Now, the big macro story today is that both the 2-year and 10-year US Treasury yields have hit 12-month highs, while Bitcoin is still stuck below its 200-day moving average. That is important because it shows us exactly why Bitcoin is struggling to get a clean breakout. When yields rise, traditional fixed income assets start looking more attractive, especially to large institutions that have to compare risk-adjusted returns. If investors can get better returns from government bonds, they do not always need to take as much risk in Bitcoin, tech stocks, or speculative crypto assets. That does not mean Bitcoin is dead. It does not mean the bull case is over, but it does mean the macro backdrop is making life harder for risk assets right now. The 200-day moving average matters because a lot of traders use it as a simple line between bullish momentum and defensive positioning. When Bitcoin is above it, the market can tell itself that the longer-term trend is healthy. When Bitcoin is below it, every rally gets questioned. Is this a breakout or just a bounce? Is this accumulation or is this distribution? Is Bitcoin preparing for the next leg higher, or is it still digesting the damage from earlier weakness? Right now, the answer is not clean. Bitcoin is close enough to keep bulls interested, but not strong enough to force bears out of position. And with yields pressing higher, the market has a very obvious reason to stay cautious. This is why today's strategy story matters as well. Strategy, the company led by Michael Saylor, has agreed to repurchase approximately $1.5 billion of its 0% convertible senior notes due 2029, with the repurchase expected to cost around $1.38 billion. The key part is that the company can use cash or potentially Bitcoin sales to fund the repurchase. Now, on one level, buying back debt at a discount can be seen as smart balance sheet management. If you can retire future obligations for less than face value, that can strengthen the company's financial position. But because this is strategy, every debt move immediately becomes a Bitcoin story. Strategy has built its entire identity around Bitcoin accumulation. So whenever there is even the possibility of Bitcoin being sold to meet obligations, the market pays attention. The company supporters will argue that this is exactly what a mature Bitcoin treasury company should do: manage liabilities, clean up the balance sheet, and use different funding sources intelligently. Critics will argue that it shows the model is not risk-free, especially when Bitcoin is below key trend levels and the company has major financial commitments. The truth is probably somewhere in the middle. This does not mean strategy is abandoning Bitcoin. But it does remind investors that even the most aggressive Bitcoin treasury company still has to operate in the real financial world, with debt, cash flow, maturities, and market pressure. Then we had XRP, which tells another side of today's market. XRP reportedly rallied around 5% after optimism around the Senate crypto bill, but then gave those gains back. That is classic XRP price action around regulatory headlines. The market gets a burst of hope, traders jump in, and then when the details are not immediately explosive enough, the move fades. XRP is still one of the most sensitive major tokens when it comes to US regulation, because its story has always been tied to legal clarity, institutional adoption, payments, and the long-running battle over how digital assets are treated by regulators. The Senate crypto bill is important because the US market has been crying out for clearer rules. Traders want to know which assets are commodities, which assets are securities, how exchanges should register, what stablecoin rules will look like, and whether major projects can operate without a constant enforcement cloud hanging over them. XRP benefits from any story that suggests Washington is moving closer to a proper framework. But the fact that XRP gave back its rally shows the market is not willing to price in victory too early. We have seen too many crypto bills, too many hearings, too many amendments, and too many political delays. So XRP holders may still be bullish on the direction of travel, but traders are clearly saying, show us the final law, not just the headline. The political angle gets even more interesting with the Trump family disclosures. According to the new filings, Donald Trump and his family expanded exposure to crypto-linked equities during the first quarter of 2026, buying shares connected to Coinbase, Mara Holdings, and Strategy. The disclosures reportedly showed at least 9 Coinbase-related transactions, including one purchase valued between $100,000 and $250,000. There were also smaller purchases of Mara shares and multiple Strategy transactions, including both buys and sells. On top of that, the filing showed exposure to names like Block, Robinhood, SoFi, Nvidia, Microsoft, Oracle, and Boeing. This matters because crypto is no longer just a retail speculation story. It is now deeply tied into politics, public markets, corporate balance sheets, and campaign-era narratives around financial innovation. When politically connected figures are buying Coinbase, Mara, and Strategy, it sends a signal that crypto-linked equities are being treated as a serious part of the investment landscape. But there is also a complication here. The same report noted that several Trump-connected crypto ventures have been dealing with large paper losses tied to falling digital asset prices. Trump media reportedly held thousands of Bitcoin, with a cost basis far above the fair value during the reporting period, and American Bitcoin also reported a large quarterly loss because of mark-to-market pressure on Bitcoin holdings. That creates a very interesting split. On one side, the Trump family appears to be increasing exposure to crypto-linked stocks. On the other side, Trump-linked crypto businesses are showing exactly how volatile this strategy can be when Bitcoin moves against you. So the message is not simply, they are buying, therefore everything is bullish. The better read is that politically connected investors still see long-term opportunity in the crypto sector, but the short-term accounting and balance sheet pain is real. Bitcoin Treasury strategies look incredible when Bitcoin is rising. They look much more uncomfortable when Bitcoin is below trend, and companies are reporting unrealized losses. Finally, we need to talk about Celsius, because this is one of those stories that reminds everyone why trust, transparency, and custody still matter in crypto. Former Celsius executive Roni Cohen-Pavon has been sentenced to time served by a U.S. federal judge after cooperating with prosecutors. He was also ordered to serve 1 year of supervised release. Prosecutors said his cooperation helped advance the case against former Celsius CEO Alex Mashinsky, who is already serving a 12-year prison sentence tied to fraud charges connected to the Celsius collapse. Cohen-Pavon had previously pleaded guilty to fraud and conspiracy charges linked to the platform's operations. The Celsius case remains one of the clearest examples of why the last crypto cycle went so badly wrong for so many retail users. Customers were told they were using a platform that offered yield and stability. But prosecutors allege that executives helped inflate the value of the CEL token while presenting the asset in a far more secure light than the reality justified. Celsius froze withdrawals in 2022, entered bankruptcy, and left users facing billions of dollars in losses. Cohen-Pavon avoiding prison because of cooperation will anger some people, especially victims who lost money. But from the prosecution side, cooperation can be used to build a stronger case against higher-level figures, and that appears to be exactly what happened with Mashinsky. So when we put all of today's stories together, the picture is very clear. Crypto is not in a simple hype cycle right now. It is in a more mature, more complicated phase. Bitcoin is being pulled around by Treasury yields and moving average levels. Strategy is showing how Bitcoin Treasury companies have to manage real debt obligations. XRP is still reacting to regulatory hope, but traders want proof before they commit. The Trump family disclosures show crypto is becoming more embedded in political and public market finance. And Celsius reminds everyone that the industry is still paying for the failures of the last cycle. The takeaway today is that the market is cautious, but not dead. Bitcoin below its 200-day average is a warning sign, especially with yields rising. XRP fading after a policy rally shows traders are still disciplined. Strategy's bond repurchase shows that balance sheets matter, even in Bitcoin-heavy companies. And the Trump-linked investment activity shows that crypto exposure is still being accumulated by major public figures, even while some crypto ventures are dealing with losses. For listeners, the key is not to overreact to one headline. Watch Bitcoin's 200-day moving average. Watch Treasury yields. Watch whether XRP can hold its range. Watch whether crypto legislation actually progresses beyond headlines. And watch how public companies with Bitcoin exposure manage their balance sheets if market conditions stay tight. And now for the XRP giveaway winners, and they are Moon, Head and Homeboy, who both win 10 XRP each. We've also got 5 XRP going to Andre Lengel, L.A. Kingsellen, and K. Chamberlain. If that's you, drop your XRP address in the comments, and make sure you include a memo if your exchange requires one. Big thanks to everyone supporting the show, using the Kraken link, and helping build the Crypto News Today community. Keep listening, keep commenting, and we'll keep doing these giveaways. That is it for today's Daily Crypto Roundup. Drop your thoughts in the comments. Are you worried about Bitcoin being stuck below the 200-day moving average? Or do you think this is just another accumulation phase before the next move higher? And what do you make of the Trump family buying crypto-linked stocks while some Trump-connected crypto ventures are showing heavy paper losses? Smash like, follow the show, check out the Kraken link in the description. And as always, we will see you at the top.